Okay. Right. Sheen screen shared. Sheen, is it? Screen shared. Let me know if you can't see, if you can't hear me. I think these bugs that were facing before have sorted themselves out. So I've had no complaints about not being heard and not being able to see the screen. So fingers crossed that continues, and hopefully we'll have a solution tomorrow because it's going to be a big day tomorrow, and I want us to be online with Wayne, who kindly gives us his time in the Friday weekly get together. But we've had problems with his audio um, of late, and let's just see if we can sort that out. Um, right. So we're going to go through my watch list, and then I'll take your questions as well along the way with regards to what you want us to look at. But essentially, for me, it's about scanning the market and looking for something that looks so easy and just looks right in line with the New York Open, which is now, and Wall Street, which is a little bit later in the day, 9:30 New York time. So the official New York Open for currencies is 7 a.m. New York. Um, Quite often in that first hour, there can be setups, but what I find is that more than often than not, there's stop hunts, it's volatile, it's choppy, um, and not the best conditions for trading. What I prefer is waiting, being patient, using that time, that window, 7 a.m., between there, speaking to you guys here, looking for what's looking good for the day ahead, and specifically 9:30 a.m. That's not to say that anything can't set up before then. You can have an 8 a.m. setup, 8:15, 8:30, 9, 9:15, 9:30. But the closer we get to 9:30, around that time, even up to 10 o'clock, 10:30, those are that's the most volatile time. And then obviously we get something a bit later in the day, around lunchtime New York, we see some volatility. Anyhow, so let's get into the dollar. Right, this US dollar, we talked about this. So these workings are from yesterday, but we'll leave them there because they're still relevant. So we talked about the dollar correcting higher, right? So that's no surprise to us, those that were in the meeting and watched the watch list video. We were looking for that correction. So we've seen that correction. The question now is whether we're going to see a downside continuation. Um, we have on the data today, let's have a look, 39 minutes, we've got a slew of data. So that will be important. The Chicago Fed national activity will actually draw some attention, even though it's not high up um, on the calendar. It's not a red event, but the if there's if it proves to show continued resilience, it will likely um, suggest that the Fed has more work to do in getting the desired sub-trend growth. So I'm going to keep an eye on that one, as well as the continuing jobless claims and initial jobless claims. They could offer a catalyst in this market that is heavily data dependent. So although it's not a red news event, keep an eye on that, guys. Durable goods as well. So personally for me, I mean, there's only 37 minutes until that data. There's, I'm not looking to do anything. Okay, I'm seeing your chats, guys. Your request for Euro, the US 30, and gold. All right, so with the euro, it really depends on what the dollar is going to do and how it reacts to the data that's coming up. Um, Euro was a first green day yesterday. So if you're not familiar with what that means, then we talk about it regularly, but um, we've had a series of red days, right? So these red triangles on my template, which by the way, you can find my template of indicators in the Discord, in education. The logo has the thumbnail is a trading view logo, so you'll easily find it there by looking for that. Um, but it talks about these arrows. So this green arrow indicates that yesterday was a up day. It closed higher than the prior day. Okay, so that is a first green day, and we've had well, we actually had a first green day up here as well, but it wasn't an ideal first green day. An ideal first green day is when the price moves to the low of the week. So Wednesday printed the low for the week, Monday, Tuesday, Wednesday, moves to the low of the week, fails, breaks up, and closes above the prior day's close. That is a first green day true setup. And what that indicates is that the market tried to go lower, failed, bulls are in control, okay, and whatever pullback we get would be an opportunity to buy, presuming that the bulls are going to stay in charge and take the price higher. So I hope that makes sense. So essentially, what we've got here then is a bullish impulse, a correction, and then prospects of a continuation. Okay, so what we're needing to see in the dollar is the same in reverse. So we've had the correction that we talked about yesterday. The dollar came lower, it's corrected up, and now we're looking for the move lower in the DXY index, and that will be reflected in the euro going higher. Okay. Um, Now, how much lower does the euro need to come? Well, we can measure the bullish impulse with our Fibonacci from top to bottom. We've seen that it's already made a 38.2, so I'm quite happy to be looking for signs of deceleration, and then we get those signs of deceleration. And we can look for those signs of deceleration on the lower time frame, say the 15-minute chart, and what we'll be looking for then, I mean, here it's coming into last week's lows. That may offer support around here. Definitely got a sort of a supported block over here. So the market displaced out of here and it's coming back in. Perhaps we'll get buying activity again from that point. And you'll see that in the price action. We'll need a break of these highs here on the 15-minute chart to really confirm that the bulls are back in charge with a change of character. For that, we've got a break of structure now, so that's a bearish scenario. It's breaking these lows currently, but it's also got this M pattern, so we can quite easily see that price move back in and start to build bullish picture. Ideally, we'd like this structure point here lower down. So what we could see, what I'd like to see, is a correction and then the price stalling, and then another move lower and then stalling close to the new high so that we can come up and break that high and then get involved for the move up. At the moment, we have to wait until 108.58. It's quite high up when we're trying to scalp this on the way up. I'm trying to get an optimal entry point as low as possible within the New York session range. So let's see if this impulse, this displacement that's occurring at the moment, slows down. It's heading towards the 50% mean reversion. It could come in as far as last month highs down here, perhaps. The 61.8 might even go to the 78.6. We don't know, but we're looking for the deceleration. And when we see that deceleration and a break of structure to the upside, that will be your cue to start looking for your entry. Again, we've got data coming out in 30 minutes. So perhaps the data will set us up. I'm not suggesting to trade the data. I'm suggesting to wait for the data to come out, let the market do what it's going to do, let the dust settle, and then look for how the market is structured and see if we don't have a setup to get involved. I'm now going to go to, could you elaborate for US 30 current resistance support? Sorry, not able to hear now. Need to activate the VPN in UA to join. We'll see the video once posted. Okay. Okay, Alex. You can't hear me, so okay, I'm responding to Alex here. So going for US 30 for Alex, US 30 day 3. Right. So yesterday we were talking about the price stalling and a move higher. So we've had some of that move higher. We haven't had the breakout. That would need to occur. Let me see now. Let me pull up a. Hold on. Again, sorry for the sniffles. I get allergies in the morning. Waking up in the jungle of Guatemala. Right. Well, the swing high is all the way up here. This all seems to be fragmented stuff, really. The market did break out of that. Developed another bearish change of character. For me, the market needs to get above this high here. All of this is potential accumulation. Let's make it green. A positive outlook. I'm just going to go out to a 4-hour chart so we can get a better handle on this. So the lowest point of this cycle was down here. Was it? Or was it here? Hold on. It appears to be here. Okay. So that would, well, unfortunately, then that. Let me see what we do about this. I have to come up even higher. Yeah. So 34649. Not the roundest of numbers, but that's what we need to break in order to officially say that this technical downtrend is broken. But by all means, we can start looking at internal structure and start identifying prospects for a break of higher up. Yeah, it's all a bit choppy, difficult to navigate at the moment. US 30. We've got a double inside day. There's plenty of orders being built up top and below. Uh, Thursday, what are we, day 3? Um, I'm still going to lean bullish on this, but we do need to see. Let's see, we come down. Broken structure on the inside over here, the inside of yesterday's range. So at the moment it's bearish, but overall I'm bullish. um, so really it's not ideal for anything imminent unless you're shorting, but I want to be buying. So what I'm waiting for is the price to set up. So I want the market to come lower. I don't mind how low it comes, so long as it stays above this low here and this low here, ideally. So if the market comes lower and then breaks structure, then we can ride it higher. But the line in the sand is right up here. And we've got, meanwhile, I don't know why I've labeled that, take that away. So really we're still on the front side of the main trend. And we're front side of this micro trend. But as this market comes down, it's leaving footprints, and we'll just monitor those footprints for a break of structure. So we'll be looking for this as what happened over here. So as the market came down, it settled, it moved up, it broke the lower high, and it made for a change of character, right? As you can see there. So that's what we're looking for. We're looking for a change of character, and then we'll look for our setup to go long. So I don't know how I can put all that in a non-audible segment for you, Alex, but you'll have to watch the video when it's recorded. So support down here, maybe in here as well. But we're looking for the market to perhaps come into this support, change of character, that sort of thing. Preferably to happen all on the same day. Okay, gold. Gold is a day 3, and it's got 3 days worth of breakouts. So, Monday, start of the week, came out of a inside day on Friday, took out stops to the downside, which fueled the bid. Okay, and London ran it high. That dump was the pump was met by a dump in the New York session. We came out of the New York session to print a higher close. We consequently moved up. That pump was met by a dump again in New York, and it was followed by a pump later in the day, and we closed higher yet again. So we've got 1, 2, and then yesterday was an all day long 3. So we've got 3 days worth of bulls in the market now. What you tend to find in such a scenario is you get a long squeeze. So it looks like we're starting to see that already. So by all means, look for your setup to sell, and you're targeting back down towards 1902, last month's lows. Yeah, last month's lows over here. Okay, so that's on the hourly chart. Now, I'm not suggesting just to simply sell. I don't like to chase displacements, and if it runs on without me, so be it. But what we haven't broken yet is this structure here. That could offer support. It broke this structural point over here, and that gave way to the breakout. It came back inside, and it's trickled down, and it's just started to take off. Data is out in 20 minutes. So what may happen is this might just continue without me on board, and as I said, so be it. That's fine. Um, if we get that drop before the Wall Street Open, then perhaps we'll see the pump in Wall Street back up into that. So there'll be opportunities later on in the day. It's a day 3. I prefer to be shorting, but if we do get that turnaround in the US dollar, it really depends on yields. So let's look at those. We haven't touched on those yet this morning. So we've been talking about yields for many days, and we're starting to see that correction that we were looking for. And that's on the 10-year, and the same with the 2-year. So I actually suggested yesterday that we'll probably see the correction. So we've seen the correction. Are they going to correct higher than here? We don't know. This is the 2-year that I'm on at the moment. But I'd be looking for a continuation to the downside. A 10-year is attempting to run higher. That's obviously fueling the slide in gold at the moment. Dollar's catching a bid as well ahead of this data. Which is all fine. Let's see if it decelerates and starts to show signs that it wants to come back in on itself. Now it looks like we've started to erode that structure we were looking at. Not quite. Let's get rid of all of this. So that there is the line of the sand it's moving into at the moment. It's taking out as we speak. This is on the 15-minute candles. plenty of space to run into. Got this candle here. So as you can see, we've got like a price imbalance between here and here. That can, if this doesn't support, then it's a fast move down into here. And then this might be a supportive area. On this order block. So 1908 guards a drop into point of control yesterday, which is this volume area here. So all in here is potential support as well, specifically around the point of control, 103.90. Okay, so I think that's gold covered. So being asked with regards to the Jackson Hole, so essentially this it begins today, but the market is waiting for Powell, and I'm still unclear if we're going to get a speech. Uh, if we're going to get a speech, his speech, prepared remarks released before he speaks or not. Anyway, so we'll have to wait and see. I'll keep you up to speed on that, but the full agenda is going to be made available tonight, I believe, or was it yesterday? Let me get the. That's the link that we need to look into. I'm just reading up on this for you guys. That's why I've got a bit quiet. So Fed Powell, he'll be speaking at 10:05 Eastern Time, and it's going to be streamed on this channel. Let me get this link for you. Wasn't very helpful. A minute. So this is the YouTube channel where it's going to be streamed live. Get that link. No, I can't get a link for it. See if I can get you a link for that. There we go. Right, so this is the link that you're going to need. We'll go through all of this tomorrow anyway, but you can look into it there. Okay, so that's about all I have for you on that. So we're just essentially waiting for Powell to speak tomorrow. Looking at dollar yen. Dollar yen, dollar yen. Dollar yen is a day two continuation, or day two reversal. Looks like a reversal. So let's have a look. So Monday failed to break higher. 1, 2, 3. Day one, day two. So yeah, day two continuation of Wednesday's peak low. So that's played out as expected. Um, it's breaking yesterday's resistance, trying to. All right, will this hold and give us an opportunity to short? Quite possibly. So that is the trend line, the broad trend line, and I'm just going to take off. In fact, let me connect this all together. So we're in the 15-minute time frame. If we come into a 5-minute time frame, we can see that there's structure over here. So if it gets below there, then that will be interesting. At the moment, this could still rally higher and give us structure higher up. 10 minutes, we've got the data coming out. So if it runs higher, then that will be the structure, but for now it's down here. So perhaps we'll get a deceleration, break of that, and that will be our opportunity to look for a scalp to the downside, considering this resistance area. If it breaks this resistance area, then the thesis is this is running higher. The dollar is obviously firming, yields are staying up. And if we get a break of this bullish impulse in the yields, then look for yen to strengthen, look for gold to come off, and the dollar to weaken, the euro to strengthen, and so forth. I'm being asked about support. Where have my drawings gone? Strange. What was I just working on? FXCM. Yeah. Right. So, being asked about support 145. Let's say 144, a bit lower down, 144.90. Meeting there. And then also over here, got those two bars meeting up near 145.20. Anyway, so we need to see, like I said, 145.50 broken at the moment, 145.70 as well. Hoping that the dollar turns around, yields come back. Let's see what happens. So we could have a scenario where it continues up. Just be aware of that. But let's see if this isn't the rally that we can scalp into in a fade. Any other questions, guys? 7 minutes before the data. Probably best to close this down and see you in the chat room. What do you think? Unless someone's got another question. Okay, guys, let's wrap it up. Have a good day ahead. Good luck. May the markets go with you.